Welcome to TheoTrade. This is Don Kaufman. December 1st, 2021. A minute to go to the cash close here on this Wednesday afternoon. Just an absolutely hideous reversal in the marketplace with dip buyers being outright denied. Listen, this bell cannot go off fast enough. Just the last 15 minutes into the cash close, S&P volume is absolutely raging. Now, we're actually going to be very forward-looking on this evening's video, what you can anticipate not only the remainder of this week, but even the next week. Well, I'm going to give you a hint right now. Extraordinary volatility hitting this tape, and this is something that is not going to abate anytime soon. Let's get down to it. Here's one aspect that I think you really need to focus on. And again, this market and this thing just cannot close fast enough. One of the aspects I want to kick this evening's video off with, the advanced decline line. Early on in today's trading session, we were actually pegged to the upside, just complete and utter correlation. That is, we actually at one point had 96 products trading to the upside. Here into the cash close, okay, what do we have right now? It is not, okay, there's the closing bell. It is not full-blown correlation. One of the areas that is a little bit dire for this marketplace, again, it can't exactly get warm and fuzzy, is number one, okay, the S&Ps. The S&Ps are down about 1.3%. You start looking, though, some of the key sectors, like look at the financials. They're only down like 1%. They're not on the leading edge of sell-side activity. Look at the energy sector, okay, not on the leading edge of sell-side activity. All right, taking a look even at the monsters of tech. Right? Where are they? Pretty much in line, if you will, with the S&Ps, but they're not even on the leading edge of sell-side activity in the Nasdaq. What's crazy about the sell-side activity today that really did deny some of the dip buyers out there is, lo and behold, I mean, this is in very large part, okay, about mega market cap underlyings. And I've been talking about this. I mean, literally just a few weeks ago, you know, we did a video and it was about how these mega market caps, including Tesla and Nvidia, can actually cause systematic risk to the entire marketplace. You're seeing precisely that today. The issue that I have with that, okay, is that sell side activity that is, okay, very persistent inside of Facebook, inside of, you know, Tesla, inside of Nvidia, okay. This could start to proliferate into something much more substantial. That looking at the S&Ps in a reversal, and by the way, this reversal just cannot be overstated. I mean, you had the S&Ps trading 4650. Where are they going to close? You know, 4,500. Again, almost 150 point, okay, reversal on an intraday basis. And that's why I'm calling this dip buyers get outright denied. But there are some very disconcerting areas. And one of the first things I want to point out here as well is not just the advanced decline line and how we didn't hit into correlation. Okay, throughout the course of the overnight trade and this morning, volatility futures were actually kind of warning us that a reversal, okay, was possible and plausible for today. The volatility did not back off a dramatic amount, nor did we actually see the bonds having big sell side activity. Everything this morning was highly guarded, and it was firing, if you will, warning shots kind of across the bow that, hey, some of that risk very well may not be over. Nevertheless, back into the volatility futures here. To explore the volatility futures is to look at both front and back month vol futures. And one of the areas, as I said, this is really kind of disconcerting in the marketplace, is the DEES volatility futures are currently trading 2750. The Jan volatility futures, okay, are 2780. We still, okay, are in an effective contango, and that short duration volatility has not eclipsed the longer duration volatility. In fact, we're looking still something like this, where at this point with this kind of sell side activity, you would have assumed that these would have inverted. I would look for this to start to invert, okay, as early as even this evening, if not tomorrow. Now that would change the nature of trade in this marketplace. By change the nature, what does that even mean? It means once you see these short duration volatility futures exceed the 49-day volatility futures, that's when you have to actually say as a trader, it's on. What's on? Okay, sell side activity. It's going to change the nature of how, okay, the entire market making side of the business hedges. It changes the dynamic of the hedge. And these short duration volatility futures, they could explode higher. How do you actually hedge that if you're short, okay, in the 21-day volatility? How do you think they hedge it? They sell S&P futures. And I'm going to tell you right now, in the professional trading world, they are massively short okay, in the shorter duration volatility. This is something I will explain in much more depth if and when we actually see the volatility futures invert as early as either this evening or tomorrow. Of course, I'll explain that live on TheoTrade. All right, let's move on. So, as I was saying, one of the dynamics that you have to really keep in mind here is, again, products like Tesla, okay, and products like Nvidia. These things, I mean, what are we? A day or two removed from all-time high. So if you're looking at the sell-side activity to abate, okay, I'll give you an argument that it is yet to actually begin. Not only am I looking at Nvidia, not only am I looking at Tesla, and I'm just telling you, there's just a few days removed from all-time highs, right? All right, Tesla, you got me. It's a couple of weeks removed from an all-time high. Selling has yet to actually begin in these. But the irony is, again, that the volatility futures are saying the exact same thing. They haven't inverted yet. We haven't seen, okay, the brunt of full risk to this marketplace. That coupled with the fact that if you take a look at the SPX, all right, so the SPX, what are we going to look at in here? The expected move. It's a 155-point expected move. I mean, net, okay, where are we on the week? This line, okay, right across your screen, right here, that's actually where this week kind of began, or if you will, last Friday, that's where we closed, which was roughly just below 4,600 in the S&Ps. This drop today, not only is it well within the scope of what we anticipated, okay, we're still, okay, quite a ways away from the lower edge of an expected move, which is all the way to the 44.40. And to see us actually come down to 44.40, then and only then have we actually can say, like, you know, we're home. So with that, okay, the remainder of this trading week, even into next week, you need to consider expansive amounts of volatility, meaning that what we've actually seen here isn't just about dip buyers being denied. It's about, again, the expansion of volatility and much more to come. I don't think anybody can scream oversold, okay, in this marketplace with any certainty, given the fact that, again, you have products like Google, and I have been very critical of Google. When you start looking at a product that's still up 63% on a year-to-date basis, these products are completely and utterly unscathed at this point in time. Sure, maybe a little damage has been incurred into the S&Ps, okay? But the way I actually see it, volatility, okay, we're just now opening up that can. You start to look to the remainder of the week, all right? Take a look at this. Between now and Friday, that just includes people Thursday and Friday, 100-point anticipation of movement, 100-point expected move. All right, okay, with that, I'm going to leave it at we're going to be extraordinarily volatile. We have a very high probability of seeing more sell-side activity. Absolutely unequivocally, this marketplace is capable of bounces, okay? But at this point, if you're not comfortable, okay, with, again, the expansion and volatility, if you're not comfortable with seeing some really fierce sell-side activity, this is where you have to start to mitigate your exposure. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful afternoon and evening. Bye-bye.